Hi everyone, today I'm meeting with Annap Derebail. Annap is IBM's Global Insurance Industry CTO within IBM's Global Business Service Unit. Annap is a distinguished engineer with over 20 years of experience. Annap's focus has always been on delivering impactful business outcomes by reimagining the user experience. Today, Annap's provide trusted advice to influence revenue growth for IBM's customers by considering architectural leadership to transform clients' business through technology. Today, we'll be covering 3 points. The future of insurance and implication on operation, how technology becomes a key enabler of growth, and how can insurers simplify operation to build resilience within their business models. Hi everyone, today I'm meeting with Annap Derebail, IBM Global Insurance Industry CTO within the IBM Global Business Services Unit and distinguished engineer at IBM with over 20 years experience within IBM. The focus of today's conversation will be around looking at how can we improve the insurance experience, looking at how we can simplify operation with advanced technologies. I'm very excited to be with Annap today because Annap also provides trusted advice to a lot of the IBM customers, and he has done that for a very long time. He has helped a lot of his customers generate increased revenues by understanding better how to design architectural environments and improve the way they are putting technology together to grow their business. So welcome, Annap, and thank you for being with us today.
Thank you, Sabine. I'm very glad to be here and have the conversation with you.
So please tell us, where do you see the future of insurance, Annap?
That's an interesting place to start, Sabine. So I think, from my perspective, there's a lot of market forces that are disrupting traditional insurance models today. The first you can think of, the dimension that one can think of is around customer expectations. Customers are increasingly looking towards an Amazon-like experience or an Uber-like experience, when it comes to dealing with their insurance. So, and what does that mean? That means the implications for insurers include creating some sort of personalized offerings via a variety of consistent digital channels, providing high levels of service and responsiveness. There's also uncertain economics, right? If you look at the market today, from an interest rate perspective, it has yielded poor investment returns. And so, the prediction on long-term returns has been difficult. So insurers have been considering new product innovations, to offset that. There's also this notion of new entrants and new business models that are entering the market. Competitors like Lemonade and Root, for example, are introducing innovations using AI, to look at underwriting and claims. What used to be traditionally, very much in the domain of insurers, when you used to go buy a new car, you used to go apply insurance from an insurance company. But if you look at, the high-end automobiles today, for example, BMW, the Tesla, Volkswagen, etc., the offer of insurance comes integral with the car when you purchase in certain geographies today. So, there is portions of that value chain that are starting to be, consumed by other entrants, whether they are new entrants or incumbents from other adjacent spaces. And also, the Amazons and the Googles of the world are experimenting with, capturing the customer experience, through things like rate codes, putting a front end. Amazon, for example, has entered the insurance market in India. So, all of these are having a huge impact in terms of how insurers need to adapt and respond. And from my perspective, the response has to be one that is heavily driven by technology. As we go further into the conversation, I think we'll find that, insurers that are making effective use of technology and using it to gain a business advantage in the market through exploitation of data and exploitation of new technologies stand to win out in the market.
Annap, you already mentioned some of the major challenger, Lemonade, Root. We can add more like Hippo, for instance, to the list. So when you look at those challenger, how can the traditional insurer deal with those and manage the challenges they have to face every single day?
That's a very interesting question. I think there is one key advantage. I can think of two key advantages that incumbent insurers have over these sort of new entrants within the market. Certainly, the new entrants are entering and creating new business models, new ways of attracting or approaching customers. But I think where incumbent insurers have the advantage is, one, they have a huge customer base. I always say that keeping a customer is 6 times as much easier than acquiring a new customer. The second is they, by virtue of having been in business for such a long time, they are sitting on tons and tons of data. They have knowledge of customer transactions, customer interactions, and so that serves as a rich basis with which they can develop a better customer understanding in order to understand the needs of their customer better and serve their customer better. This is something that incumbent insurers, definitely have an advantage. There is an issue that is sitting in the middle, though, in that while the data, there's tremendous volumes of data that is available to these incumbent insurers, less than 10% of the insurers have actually been able to reap what we call as the data dividend, right? Effectively use the data in order to achieve competitive advantage. And that's because of a lot of foundational issues in terms of how to access the data, how the data is siloed, or lives in different silos, perhaps within each lines of business, or perhaps within different infrastructures as insurers have grown, either at multiple data centers or in multiple cloud centers, or as they acquire new SaaS capabilities, they're creating new islands of data all over the place. Being able to effectively integrate that data and get a nice unified customer 360 or a customer 720 view, and being able to predict the needs of the customer and respond with the right kind of products that are of interest to their customer is where I think the incumbent insurers can meet the challenge head on.
One point you made, which I think is very important for us to dive into, is you already touched upon corporate versus venture, where a corporate has a lot of capabilities. They have willingness often to invest, global infrastructure, they have access to customer, they have brand reputation. And when you look at the venture, like of a Lemonade and an Hippo and a Root, those guys came to market and build amazing ventures, and they bring the disruptive ideas, the latest technology. They actually also get access to extended network because they look at their business model in a very unique way. And they have this entrepreneurial mindset. So when you look at the insurance company business model, how can we help insurers adapt and improve their operation and their core processes? Annap.
So I can think of perhaps 2 or 3 areas where we can really help insurers. The first one, insurers really need to reinvent their risk, how they think about risk, and what sort of a relationship that they want with their customers. right? So reinventing that risk partnership, right? Helping insurers build new risk experiences that offer personalized advice, and demonstrate a true risk partnership between the insurer and their customer. Being able to harness the data, the big data that we are talking about, non-discrete data from, as well as data coming in from new sources. And that's done by taking a fresh look at historically operating, processes within the enterprise, processes, critical processes such as underwriting and claims, but also all of the supporting processes like billing or customer support, policy maintenance, etc. Just by paying attention to driving intelligence into those processes using data, we've been able to, for example, reduce 15% of customer churn. When we're able to deploy a churn detection model and determine that an employee, a customer is at a risk for leaving the relationship, right? So that's so reinventing the risk partnership. Helping insurers reinvent that risk partnership and be a true partner to their customer, but through effective use of data, intelligent workflows, and automation. I think that's one area where we can help. The second area that I think we can help is to help them drive, a step change in their core productivity. So if we look at the IT landscape of an average incumbent insurer, I think about 50 to 60% of their cost goes in maintenance of legacy IT systems. So modernizing the core by consolidating, the average insurer has multiple core systems in place and that are not effectively integrated with each other. And quite often, insurance company personnel are left playing, what I call is the game of swivel chairs, taking data from one system, entering it in another system, etc. So modernizing the core, consolidating it, encapsulating and decommissioning, moving, to as a service type of model, right? And then looking at developing new applications based on cloud-driven, using cloud-native, technologies such as, microservices, APIs, strong core models, etc. And then automating, and providing the right sort of insight to humans when they have to actually operate within that span of any given core process, by providing them as much data, data as well as insight, from the data in order to assist automated decision making, or at least assisted decision making. That's the second area where I think we can help. And then the third area is helping them future-proof themselves. I talked about the fact that about 50 to 60% of the cost is taken up by legacy, in terms of legacy IT. So anytime you want to modernize the architecture, looking at future-proofing yourself and not being tied down to a single sort of vendor lock-in, so to speak, I think is important. And I believe that while cloud native is the destination, hybrid cloud architecture and providing the roadmap for insurers to be able to get to that ultimate landscape through using effective use of technologies like containerization, orchestration, automation, etc., and then providing the ability to manage that, in an intelligent manner, right? So we're not talking just about putting intelligence into processes, but also putting intelligence into management of that infrastructure that you are putting in place so that you can efficiently recover from errors. When IT errors occur, they have an implication back in your underwriting or your claims process. Being able to detect that, proactively react to that, I think those are the areas, 3 areas where I think we can help insurers best.
Thank you. So you covered a topic I covered recently with Mark McLaughlin around risk and risk experiences. And what I'm hearing from you, Annap, is that we are moving into a new world where we need to understand how to deal with the customer and deal with new risk experiences. But at the same time, we are dealing with costly legacy environment, which is taking 50 to 60% of our cost. So what are the things which we can do? What are the enablers of growth? What are the type of technology we can start considering to start modernizing to serve the customer better?
Yeah, without question, it starts. I think the way I'd like to answer that question is you can address it at multiple levels within the organization. And let's start with the basics, which is the infrastructure, right? At the infrastructure level, what I see is a lot of incumbent insurers still operating, legacy IT systems running on legacy infrastructure. The immediate opportunity there is to migrate those on to a cloud-based platform. Migrating to a cloud-based platform obviously brings with it inherent benefits like flexibility in terms of being able to scale up or scale down in response to demand. But at the same time, it introduces the ability to be flexible, right, in response to market needs. So at the infrastructure level, the answer to that is basically cloud. But the journey to cloud is something that takes time, as I mentioned earlier, so immediate benefits can be gotten by looking at a hybrid cloud-based approach, right? Where we can take advantage of cloud-based services, but access them from wherever you are, right? So that's point one. Point two, if you look above the infrastructure layer, you have your systems that operate, and those systems run business processes. So introducing, and if you look at those business processes and the systems that have been in place, the typical underwriting or claims process tends to have heavy human involvement today, right? So and it requires a large number of steps in order to make decisions whenever you hit a decision point. I think the scope for there is to effectively use that mountain of data that I referred to earlier that insurers are sitting upon, be able to present right data to the right decision makers at the right time. And I'm not talking just about raw data, but I'm talking about insights that are derived from the raw data, right? So we can think about introducing intelligent claims or intelligent underwriting, where you can try to improve straight-through processing of a majority of the incoming cases, if you will, that come into an insurance business process. By efficiently being able to utilize data-driven insights, one can categorize, an incoming case to figure out, if it is something that can be routed automatically through the process, or if it is something that is an exception that does indeed require human attention. Simple example of this is, insurance processes tend to be heavily document-driven, right? People file claims, people submit evidence, etc. And today there is a lot of human involvement in processing those documents, extracting the information out of those documents, and then being able to drive what is effectively an automated process. If we can somehow automate the intelligent extraction of information out of the data that is coming in from those documents, regardless of where the documents are coming in from, whether it's fax, whether it's email, whether it's a spreadsheet, whether it's an image that has been transmitted, whether it's a form that has been submitted electronically, right? If we can run that through a processing pipeline and be able to extract that information, pipe that through automatically, right? So that's the heavy application of AI and automation, I think, are the two other areas that one can think of. Beyond that, there's a whole slew of other technologies, right? I mean, we talked about blockchain, for example. For insurers to efficiently act upon data, they need data not only from within the enterprise, but also, external sources of data, right? I'll give you an example. We did some work with an insurer about within the last 18 months. It was looking at the entire agricultural supply chain, from farm to table, right? If you look at that ecosystem and ensuring different aspects of that ecosystem, all the way from ensuring crop yields at the farm to ensuring food processors who are in the business of converting the raw food product, such as raw meat, into finished product that can be sold in a supermarket. There's various forms of insurance that can be offered, or risk protection that can be offered at different points along the chain. But if you step back and look at how that ecosystem is operating today, there is no universal availability of data across the entire ecosystem, so that insurers can think about how best to create risk protection products. There is data within different silos, and those silos exist within individual companies along the supply chain. For them to be able to pool the data in a common place, enable the insurer to get insights, risk insights based on that pooled data, we need a technology solution that is trustable, so to speak, right? So blockchain can form the basis for this sort of zero trust architecture, where we can enable the efficient sharing of the data without having any participant within that ecosystem have access to insights or raw data that they are not entitled to, right? So that's another example of how technology can be used in order to address, innovations within the insurance ecosystem. Sorry, go ahead.
Now, I was going to ask you, Annap, so what you are talking about is designing potentially a trusted core business model. And then you are doing that with some aspect of distributed technology to doing so?
Yes, that's very much correct. I mean, so that was just one example of, I was trying to touch upon infrastructure and automation, intelligent workflows, and, enabling, efficient data sharing in terms of achieving the right kind of risk insights that can then form the basis for developing new products, right? Yeah.
And those are important because there is some terminology which I use in the industry, which I think would be helpful as well to understand the power of the terminology and how that plays within that value chain and the ecosystem you mentioned. One of them is, using cloud to actually take away the technological debt that a lot of insurance companies have. And I think it's very important to touch upon that and how it's done. The other thing we already talked about AI is how do we integrate the human in the loop when we start designing the businesses of the future?
Yeah. So let me touch upon the cloud question first, right? Certainly, take we don't want to be introducing new technology and buying new technology debt at the same time, right? So taking away technology debt really means addressing age-old design decisions that have been made for inflexible architectures that are resistant to change. I mean, I'll give you a simple example. I was talking to an insurer about maybe 3 years ago that was looking to redesign their this is a life insurer that is based out in the Far East. And they create, all manners of life and investment products, life insurance products that are coupled with insurance, annuities or, investment related products, right? For them to make a single change, and they're operating on a 30-year-old product management system. So for them to make a single change in their business product, right, in the terms and conditions associated with the business product, and to propagate that change via their IT infrastructure, used to take them 9 months. Wow. And I'm not kidding when I say this. Okay. That is typical for, that's the implication of technology debt. The business implication of technology debt is really that inflexibility in being able to tune or tailor your product to meet the market needs, right? So the way cloud helps you do this is by taking a fresh look at your core application architecture, being able to take a fresh look, one, at the infrastructure level, certainly immediately buys you the flexibility to increase or decrease the compute capacity that you have. But that's only one part of the equation. The second part of the equation is to take a fresh look at your application architecture and try to figure out if it can be efficiently componentized such that each of the components can then independently scale, up or down. For example, in the case of this particular insurer, all we need to do is to look at the product management component of the business and see what it takes in order to, efficiently roll out changes and enable that component to grow or shrink with the needs of the business, so to speak, right? So that's how cloud enables, the componentization aspect. The containerization is the key. Components typically manifest themselves in, as containers, and, as containers are deployed onto infrastructure, containers can be brought up or brought down, and we can make local changes to those components, right? So that's at the application level. So that's how we address the cloud, addressing technology debt. The second point that you talked about, the human in the loop. I mean, I don't see AI, as ever being, replacing humans, right? I think AI has specific applications. Specific AI algorithms have specific applications to be able to automate certain aspects of processes. But the best use for AI is, when there is a complex challenge where the human needs to make a decision and only has, we tend to rely on the human's intuition or years of knowledge in order to make the decision, right? So AI can only, augment the human in terms of, enabling the decision making, so to speak. So I don't see AI as being a complete replacement to achieve 100% automation within all given processes. In certain processes, I believe that it can, but in a majority of the processes, AI is going to play a key role in providing decision alternatives to the human, so that humans can then ultimately make the complex decision that is required in order to service the needs of the customer the best.
That's fascinating, because at the same time as you were talking about artificial intelligence and cloud, I was remembering some of the questions I'm being asked by insurers around, you touch upon some of those issues around intelligent claim, but also around algorithmic underwriting. So I was going to ask you, when you actually look at unique innovation coming into the market, how do we start driving predictive maintenance industrial insurance, for instance? Do you have case study and example where we can actually see real great achievements today using technology?
Yeah, I mean, it's actually interesting you bring up predictive maintenance, because I actually spent 15 years in IBM's industrial sector working with firms in automotive, aerospace, and defense. Before I started my career here in insurance, right? So during my work in aerospace and defense, A&D is actually one of those industries that has taken huge advantage of predictive maintenance capabilities. In fact, I mean, I worked on what we call as an aircraft health management system way back in the early 2010s, well before data science was even a term. If you look at that's one example of an industry that uses data science day in and day out in order to optimize the operation of the engines, the operation of the different systems on the aircraft, etc. Now, if you take that and translate that into some of the work that I've been doing here in insurance, especially if you look at the commercial space, right? Commercial buildings, for example, have heavy use of industrial machinery, things like HVAC systems, right? And when these huge systems break down, it can result in a significant impact to the operation of the building, right? So when insurers insure these systems, complex electromechanical systems, there is huge incentive for the insurer to be able to predict when these systems can fail and recommend preventive action that can be taken in order to prevent the, for example, it might mean replacing a given part in a HVAC system, right? So I've worked, for example, within the last 3 years with actually 2 different insurers that were looking at this particular problem. So commercial buildings and maintenance of large-scale electromechanical systems that form the nervous system behind these commercial buildings, I think is one good example of where can have a huge impact with instrumented IoT systems, and the related insurance that goes with it. The second area that I think I see huge potential is in even in personal lines. If you look at the average home here within the United States, let's take United States as an example, most homes are built out of wood, right? And if you look at the sources of claims within homes, by and large, I think either the biggest or the second largest source of loss tends to be water leaks. Or at least from the payout perspective, the average payout associated with the water leak in a home tends to be in the neighborhood of $7,000 to $8,000, right? Which is a huge amount. So outfitting homes, for example, with water leak sensors, and not only being able to raise alerts, but also, looking at equipment that can take preventive action, such as, electronically operated actuators that can shut off the, water to to a home, if a true threat is detected. Looking at humidity, rising humidity levels or humidity trends within a home, are some other examples of how one can look at prevention even before a claim is filed, right? And I think this sort of non-premium value-added services that look at risk prevention, I think the use of those is going to go increase as sensors and technologies like 5G and edge computing become more and more prevalent. I'll give you another interesting example, and this is very real, right? I don't know if you remember, about 3 years ago or 2 years ago, Uber was testing self-driving cars in the state of Arizona, and there was an accident where the driver basically went to sleep or was distracted, and it resulted actually in a human being killed as she was crossing the road. The interesting part about that is the car was well instrumented. However, the time that it took for the signal to travel back from the car back to the data center and for the action to come back, in order to stop the car was not sufficient, right? I mean, we were fighting the speed of light. Now, with the advances in edge computing, that signal doesn't have to travel all the way back to a data center, that perhaps sits in Uber's headquarters or somewhere else, right? It can be really localized down to the zip code or even a very close, geographical distance, such that local decisions can be taken much faster. So you're no longer fighting necessarily the speed of light. I think that's the power that edge computing brings, right? So edge computing is basically this ability to take the compute and move it as close to where the data is. The edge can be right directly on the car, or it can be in a mesh of cars that are traveling within a given zip code, or it can be a local data center that is attached to a cell tower that is sitting in the proximity of where the particular car is, right? So these are the sorts of interesting technology evolutions, I think, that will enable much more fine-grained or differentiated capture of risk, that has huge implications for what products that insurers can offer or services that insurers can offer, both in terms of prevention but also in terms of new products.
Yeah, interesting. So when you look at all those changes, technological changes, and all those great things coming to market, what does it mean from a talent and culture? It means that you have a completely new set of people going to get the job done.
That is true, but what I'm increasingly finding is that financial services firms are really starting to think of themselves, or they have been thinking of, at least a few of the leading edge ones have been thinking of themselves as being software providers first, that also serve the needs of their customers, right? So I think that's the sort of mindset shift that needs to happen. I always tell people that I talked to you about how I came back, my heritage in the industrial sector. So I went from an industry that used to make widgets to one, in the financial services world where the products are no longer real, right? Meaning you cannot touch or feel an insurance product. However, those products live on a computer and they serve a given need, right? So insurers really need to think about themselves as being software providers. And I think, we are already familiar with a lot of the roles. I think, cloud architect, data scientist, etc. I think these have become, commonplace within the industry. And I think every insurer that I visit has cloud architects, they have data scientists, etc. There's also going to be a completely new set of roles, keeping the infrastructure running, 24/7, roles like site reliability engineer that ensure that, the sort of infrastructure can be maintained, it runs without issues. Think about what sort of automation can be introduced, what sort of AI can be introduced in order to run the automation, infrastructure, in an, keep it running efficiently. Data engineering, right? I mean, I talked about the different silos of data. How do you efficiently bring together those silos of data and serve the needs of the data scientists that you have on the staff? Using new technologies like data fabric, right, which allow data to stay wherever it is, but bring the capability to access it on demand and provide the right sort of data sets to the data scientists at the right place at the right time, right, so that they can efficiently build the right models to serve the needs of their customer. Those are the sorts of roles, I think, that are going to be scarce in the near term, but ones that insurers should be paying attention to. Right?
So Annap, what would be your last word? So Annap, what would be the last words you would like to leave with our audience and listener tonight?
Yeah, first of all, Sabine, I'd like to thank you and the audience here, for providing me the opportunity to put my views together here. I think what I'd like to leave the audience with is, we have IBM has been working with insurers to help them innovate, from a digital core layer, from a data foundation layer, for a long time. And we have a whole slew of interesting ideas, innovative ideas and methodologies, things like the IBM Garage, enabling insurers to become, cloud native, enabling them to adopt, agile development cultures, to become leading edge, to help them build out ecosystems, both, data ecosystems as well as, service ecosystems by partnering, in order to enable this sort of new product innovation, new thinking, etc. So I'd really like to leave them with the invitation to have a second conversation with me or any of my colleagues.
Annap, thank you so much for the insight. I was actually completely mesmerized with what I've learned today. So thank you for your time.
Thank you, Sabine.
So thank you. Good night. If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.